this afternoon. Rajesh, let me start off with some of these OMC companies and some of these OMC names. Well, we have a packed house here. Give us a sense on what you make in terms of a view with regard to how OMCs have moved and whether there is still some bit of move, at least on charts left, before I go across to Sudeep and take his view with regard to fundamentals.
Yeah, hi, afternoon. So if you see all the three major companies, IOC, HPCL, BPCL, they already had a strong move. And today somewhere we are seeing some reversal signs or some kind of profit booking. If you see IOC, HPCL, they are trading below its recent intraday supports and also below 20 EMA. So we are expecting that some kind of profit booking can extend in the near term. And as compared to that, we are bullish on the ONGC. So ONGC has been in a consolidation phase, but it has now crossed its July swing high. And possibly there can be a positive traction in the ONGC extending towards the 260 level. So IOC, HPCL, BPCL can see some profit booking, whereas ONGC can see some further extension of upside.
Okay. And Sudeep, with regard to some of these OMC names, classic dividend plays, of course, but if there is the risk of crude spiking, that could well vanish very, very quickly. So how are you looking at the risk reward here?
Well, you're absolutely right. I think you have to remember that we are heading into a state election. So it's extremely unlikely that there will be increase in any prices in the pump level. Under the circumstances, the moment the crude oil spikes, these marketing companies will take a hit in their profitability. I'm not saying they will be having a problem as far as profitability is concerned at a unit level as well, but definitely the profitability will take a hit. So the circumstances which are building up that crude oil prices may go up doesn't augur well for the oil marketing companies. So I will be a little careful as far as oil marketing companies are concerned. And I agree with the technical analysis. Fundamentally, also, I think it's better to play through the generating companies, oil generating companies, which is oil producing companies rather. So ONGC can definitely be looked at current levels. Even otherwise, I think from a long-term perspective, ONGC does look good, considering the fact that oil is becoming extremely important. And at some level, ONGC deserves a re-rating.
Labs come out with numbers. 35% growth looks slightly above what most were penciling in. That EBITDA number also looking quite good in comparison to what analysts were penciling in. So that number looking much better. But 0.7% higher. Stock cooling off a little bit from the highs of the day. But we'll wait and watch on that margin number because that will be crucial to understand as to how this one has played out. Kunal, Laurus on your list at all? Would it interest you? And if not, what within the pharma basket?
Yeah, it's done reasonably well. In fact,
Yes.
Laurus Labs, I remember, I think tracking the stock when it was almost at 450, 500, start of this year or maybe end of the previous year. And from there, the stock has done exceptionally well. So I think in that context, yes, the stock has done fairly well. But then trying to put this into context with many of the other pharma stocks, the stock stands out, to be a strong outperformer with respect to most of the other stocks in the pharma pack. So I think solitary for Laurus Lab, we may probably expect the stock to continue to move up higher on the upside. The support with the stock has established in the last 2 months of this price range and then a breakout, I think is closer to 850, 860 marks. So maybe that could be kept as a positional based stop loss for traders who are looking at a buy.
Sudeep, do you have a view? Laurus Labs?
Well, I think, as far as pharma companies are concerned, I'm a little cautious. But having said that, the way things are developing in US and US-India trade relations and overall pharma scenario as far as US tariffs are concerned, I'm less concerned compared to what I was earlier. I think the pharma companies will avoid the bullet at this stage. And Laurus definitely, based on performance, do look good.
Okay, so that's the take on Laurus Labs. You were awaiting that margin number and we have clarity there. Consolidated EBITDA margin has come in at 24.4% compared to 14.6%. It's almost I mean, it's a crazy uptick that we're seeing on the margin front as well. The stock is reacting to that. Yes, a 1% uptick coming in on the stock. That little dip that we saw after the initial numbers, it seems like that's being bought into right now. And an uptick, once again, is something that we're seeing on Laurus Labs. But Sudeep continues to be cautious on pharma. Arpit, what about your take on the overall healthcare space? Hospitals, diagnostics, anything that's looking attractive from there?
If you look at the overall healthcare space, so definitely our prior pick was Fortis and Max Healthcare. That used to be our prime stocks to look out for. However, in the last couple of days, definitely the stock, if you talk about Fortis particularly, the stock is in strong uptrend from almost July series to the stock is moving one way from 700 to almost 1100 levels. Last couple of days, the stock has corrected marginally from high levels, but looking at the bigger time frame structure, definitely any dip towards 980, 990 would be again a buying zone for this counter. So Fortis would be a preferred pick within the healthcare space. It's in clean uptrend and it's kind of a classical buy on dips counter. And if you look at the daily scale also, its stock is perfectly holding about its 50 DEMA. So that is a good entry point around 1000 levels. So that stock can be added near around 1000 levels. We're keeping stop loss of 960 for an upside move towards 1100 and then positionally 1200 plus.
Okay, Rajesh, now, within the universe, outside of IT and private banks, I think everything has been sold into to a large extent. In fact, the Nifty is now flatlining. Let's pull up the Nifty 50 and it's looking like a day where we're increasingly going to, it's the Nifty 50, that's the, okay, can I have the intraday? There you go. So it's flatlining as we speak. So zero returns in terms of all of the moves that we made today morning has been sold into. Rajesh, do you have a view on the Nifty itself now? 26K breach today, but very, very briefly, we've virtually pulled back from that level. Now we're below 25,900. What are the levels you're looking at?
So if we see from the start of the October month itself, we had a strong rally, and it's like a sell on news kind of thing. The things that have happened in the last couple of days, it was already discounted, and post that after a gap up, markets are not sustaining at higher levels. Having said that, we are seeing a long consolidation breakout after more than 1 year. So any dip towards the June swing high somewhere around 25,700 would be a buying approach. We expect Nifty to retest its all-time high somewhere around 26,300. So buy on dip would be what we are expecting in the near term.
Kunal, Nifty?
Yeah, so I think this could be a normal routine profit booking which would be happening just to try and protect that 26,000 mark. So from an option writing perspective, we need to see how the the index sustains if it happens in the next couple of days about the 26,000 mark. This also tells you that the markets were getting a little bit more frothy after this 1500 point rally. So we started off the October month at 24,500 thereabouts, and we are almost at 26,000 mark. So after a 1500 point rally, there's bound to be a point where the index consolidates. But generally we've seen historically that whenever the index consolidates after the initial move is led by large caps, that consolidation opens up mid caps and small caps outperformance. So maybe this could be a healthy consolidation where the index may just about gradually trade into a range or a band over here, but then the market breadth will start to open up. I think that's typically what happens when sentiment remains to be bullish, but large caps generally dominate the first leg of up move.
So it's largely one door closes, another opens kind of a
Yeah,
situation
multiple
for the
doors
market.
open
Multiple
up.
doors
So you'll have to
open
change your trading style. You'll have to look at the kind
Sure.
of picks which you pick at current levels.
But Kunal, what does this tell you about the confidence in the market right now? The day we breach 26,000, it's all sold into. Is that an indication about the kind of confidence levels we're seeing in the market right now?
No, I'll not look at it this way, Sneha. So look at this way that traders who've been riding this point for the last 1,500 points for the index, there's bound to be some point where you will try and take out profits from large cap names and then shift towards the mid cap stocks. You look at the intraday correction, I think more or less, it's ICICI Bank which has gone through a sharp correction, some retracement which has happened for HDFC Bank and Reliance Industries. But then you look at the new set of large cap stocks which have participated. SBI is almost at its new high. L&T has come back to almost very close to breaking that 4,000 mark. So you have slew of large cap stocks which are outperforming and showing signs of a potential breakout. Index at the end of the day is a mirror of what happens to its Nifty 50 constituents.
Correct.
Right? Nifty by itself may not have a buy on the spot levels, but then if the components of the Nifty stocks, the larger cap names, if they come back towards a 52-week high, it's a matter of time that the Nifty replicates that kind of a trend. So I think in that context, the trend is set on the upside. It was just that we were going through a little bit of a froth over here. That froth should now ebb off.
And therefore, what are your picks in this market, Kunal? I know a couple of back-to-back questions, but give us your picks. Give us a sense.
So I think Vodafone Idea is something which I had highlighted. That's something which looks attractive. As I said, we might have to change the style in terms of trying to pick the trades over here, not focusing too much on large cap names, at least as of now, because I believe that we could be in for some bit of a resting period over here for larger cap names. From the mid cap and there's another name which has started to look attractive on the breakout front, and that's Samvadna Motherson. I think at 107 or 108 where it's trading right now, showing signs of an inverted head and shoulder pattern breakout for the stock. So maybe that could be another short-term trade which traders could look out for, say closer to 112, 113 as a target, and stop loss at 105.
Interesting. Okay. Rajesh, your picks. I know we haven't had a chance to ask you for those. So you want to give out a couple of names which you like at this point?
So Bandhan Bank has been forming a base on the 200 DMA, and today we are seeing a range breakout. Also, the prices are holding about 89 EMA after a long time. So we are expecting a strong momentum in the Bandhan Bank. So it can be bought with a stop loss of 166 and expecting targets of around 184. The second recommendation I would like to give is Ashok Leyland. The stock had seen a sharp rally, but then we had seen a price correction in the October month. Prices have taken support somewhere around 50 EMA, and some kind of higher bottom structure is happening. Today, the prices are regaining above its 20 EMA, and we expect uptrend to resume. So with a stop loss of 135, Ashok Leyland can be bought, expecting targets of 147.
That's the take on the stocks that you're liking, Rajesh. Arpit, what about you? Some stock-specific picks for our viewers?
So looking at the overall market setup, definitely selective large cap and selective mid caps are outperforming. So first would be from the infra space, L&T. So if you look at the monthly chart structure of L&T, it is given a monthly range breakout after almost 16 to 18 months. A very strong setup on the weekly setup. Though in last 10 hours, we have seen some cool off from the high levels, but the bigger trend is positive, and one can look out from positionally with major support around 3800 for an upside move towards 4000, 4100. Second would be from the NBFC space, AB Capital. A stock in clean uptrend on the monthly time frame, gave a range breaker on the weekly scale after 3 weeks above 306 levels. Stock is holding well above 300 levels. So the base of the stock is shifting higher, and we can see new life highs in couple of weeks to months time frame. So one can go long with major support around 297 for an upside move towards 325, 330 plus zones.
Okay, so those are some of the stocks that you're liking at the moment. Just want to revisit some sectors that have been doing very well today. And following IT, of course, it's a day of IT. It's FMCG that's seen a little bit of recovery. But Kunal, Nifty Realty, that was the second highest gainer today, has seen a sharp fall, and it is now one of the losers. It slipped into the red. And you have been bullish on the realty space of late. Your outlook over here?
Yeah, so I think few of the stocks are confirming breakouts. So Prestige, for example, I think is a classical stock over here. Godrej Properties is another chart which has done exceptionally well. For the stocks to come back above their 200 moving averages, even when the sector was trading below the longer term average, or many of the components, large cap names like DLF, they were trading below their long term averages, that tells you that the sector is getting a little bit more diverged, where you're seeing other stocks leading the charge. So I'll still be bullish on those few odd real estate names. I still believe that Prestige and Godrej Properties, even at current levels, they could be good candidates of maybe a hold at current juncture. Yes, the real estate sector could probably have cooled off, but I would still believe that the larger term structure for the entire sector is also much on the bullish side.
Interesting. So that's with regard to realty. I was just pulling out some data with regard to Laurus Labs. Now, obviously, numbers came out, stock hasn't really moved. But you look at the top line number of 1650 odd crore, it's higher by about 10% versus what analysts were penciling in. And I'm talking about the poll of 9 analysts, which is available on Bloomberg. That seems to be suggesting this. Even the EBITDA number of 308.5 crore was the poll number of EBITDA. It's come in at 403 crore, so sharply higher on the EBITDA count as well. And then you're looking at earnings, of course, as a result of that. Your net income, which is your profitability, was higher by nearly 30% as a result. So it's a very, very good set of numbers. Stock perked up 1.5% in trade. 24.5% on the margin count, which is expected to go up by just about 700 bips on a year-on-year basis. But from 14.5, it's gone to 24.5%. So that's a solid 10% increase in terms of margins, of course. So Laurus Labs surely on your radar, or ought to be. Sudeep, if I can ask you and venture a question, how best would you play the tariff trade? The fact that TACO, which is Trump always chickens out, will likely play out in this context as well. And maybe something as early as November, where the risk reward is favorable. If at all you would play it, how would you play it?
Well, if I have to really play the TACO trade, I think I will go and buy some of these Gokuldas Export and Welspun leaving kind of stock. They have been the worst hit companies with the tariff in US. But I think if there is actually a TACO happening, I think they will benefit the most. So if I have to play that trade, I need to buy these stocks. Also, I must mention that fundamentally these stocks have been doing well. The UK FTA implementation will definitely help them. EU FTA is being talked about, and that should help them again going forward. So I think things were going good for them, except for this entire US fiasco. Now, if this US thing gets resolved, I think it's going to be a good time for them. And the 15% tariff between India and US, which is being talked about, if that becomes a reality, they will be better off compared to some of the neighboring countries where the tariffs are slightly higher. So they definitely are going to be beneficiaries. But I will add a word of caution that I think we have seen too much of volatility with the Trump administration's action. So it's always better to be careful. But if you are a little aggressive investor, want to play the trade, go and buy Welspun Living, Gokuldas Export. I think you should do well.
Welspun Living, Gokuldas Export. You want to buy those if you want to follow Sudeep, especially on the TACO trade. Now let's talk about a little bit also about some of the smaller lenders. And some of these names have done extraordinarily well. Let's pull up an DCB Bank. Let's pull up an AU Small Finance Bank. Let's pull up a Yes Bank. Now, before I go and ask maybe a fundamental question, let me ask Arpit with regard to charts. Arpit, anything you're liking in this space? Is this trade more or less done, or is there still more steam left in this trade? Give us a sense.
If we see overall, talking about the mid-cap banking space, if you look at the overall chart structure, which definitely last couple of weeks has been the outperformance seen in particularly mid-cap banking space. So if you look at the chart structure of AU Small or particularly Federal Bank. So if I look at the chart setup of Federal Bank, so it has given a classical pour and flag breakout on the monthly scale after almost 15 months above 215 levels. And look at the setup wise, definitely the banking sector is likely to outperform here on, as this is the first index to hit life highs. And I think the mid-cap banks are likely to attract attraction within the private space as well as from the PSU space. So from the private space, Federal Bank would be a preferred pick. Positionally looks good from 10 to 15% in next couple of months time frame. Along with the private banks, the second would be from the PSU space, and that is pick would be Canara Bank. So if you look at the chart setup of Can Bank also, it is on the verge of its major breakout on the monthly setup above 128, 130 levels, and PSU sector is back to its life highs. So definitely from here on, we can expect good upside move towards 135, 145 levels. So I think mid-cap space banks would be the outperformance that can be seen. Fed Bank and Canara Bank would be a preferred pick within this space.
Banking, PSU, mid-small, would it be the large cap banks? How would you play it? Rajesh?
This was okay. We have the same view. We are very bullish on the PSU banking space, and as highlighted, Canara Bank is our preferred pick. We have also recommended in our Diwali recommendations. So quite bullish on the Canara Bank, and from the mid-size private banks, Bandhan Bank looks good as already highlighted. The stock is forming a base around its 200 DMA, and some kind of reversal is there. So possibly the stock can move from here towards 182 to 185 levels. So Bandhan Bank can be bought from a short term as well as a medium term point of view, and Canara Bank as well.
Well, we've taken Kunal's views plenty of times now with regard to banks, so I won't come to you on banks. But Sudeep, do you have an opinion from a fundamental perspective within the banking space? What are your favorites, and how best would you play lenders at this point?
Well, I do like the PSU banks. Generally, I think there is a valuation comfort still there. If I have to play really safe, I'll go and buy State Bank of India, even at current level. I believe there is still opportunity if you're a long-term investor there. But if I want to be a little aggressive, I will go and buy some of the mid and small cap PSU banks. And Central Bank of India has been drawing our attention. I think valuation-wise, it is really available at an attractive valuation. There is a talk of consolidation once again as far as PSU banks are concerned, and probably at some stage, some of these consolidations will be happening, and some of these smaller banks, which are quoting at significant discount to their book value, should definitely benefit. So, investor with risk appetite should buy some of these smaller PSU banks. As far as non-bank lenders are concerned, I think the view has been veering around gold loan companies, and I completely agree on that. I think the gold loan business is doing definitely well, but I'll rather investors focus on some of the banks which have become aggressive on gold loans, and Federal Bank attracts our attention. They have been doing otherwise also well. There is some fundraising planned, which probably we will get to know very soon. But beyond all that, I think the gold loan business of Federal Bank is doing well, and they have significant opportunity for scaling up that business. So I will look at Federal Bank from a gold loan perspective as well.